We have seen a great run with gold and some other metals in the past few weeks, but now everything has cooled down again. But at this point of time, we actually see the US government walking around and making deals with the entire world. We have seen Donald Trump being in Japan, asking for money for critical mineral projects, but also the US has done some critical minerals deals with Australia. And today with me is Paul Adams. He is the managing director of Kali Metals. That's a lithium and gold exploration company. So Paul is in the middle of the scene and he knows exactly what is happening within the space. And I'm really looking forward to our talk today. So Paul, first of all, thank you very much for your time. It's great having you.
Yep, great to be on again. Thanks, Jan.
Maybe we can start by you giving us a little bit of an overview of what is happening in our world. I mean, we all know the trade war and the materials war between China and the US. The US has to diversify their the supply chains for critical minerals because they don't really have any. China has, well, let's say, the hand on the supply and the minerals. So maybe you can give us an idea what is happening and give us some numbers.
Sure. I think, I think everybody's reasonably well aware that the US is trying to diversify its supply chain, particularly of critical minerals, and particularly, a whole raft of different commodities that China has historically been able to make the price maker on. And I think the US, given the amount of technology now that's going into AI in particular, and of course, rare earths as well, as a whole bunch of metals that are going to be increasingly important for supply chain within the US and in fact with Western countries in general, and that includes the G7. And as part of that, the US has been expanding its footprint in the critical mineral space, and that has culminated recently in a deal between Donald Trump and Anthony Albanese, our Prime Minister here, with respect to critical minerals in Australia. And that will include Australia making investments in critical minerals to supply the US supply chain with the minerals that it needs. So I think that has been quite a short-term boon for some of the critical minerals company on the ASX.
Absolutely, I agree. And do you know if the money that has to be spent, will that be with an Australian project or will that be worldwide? Do you know that?
Yeah, I think the deal has been expanded recently, and I think some of the G7 countries now have been brought sort of within that envelope of those types of deals. And I think in Australia there was an initial investment of, let's say, circa $2 billion, and that is probably going to be expanded over time. And as the demand from the US for these critical minerals increases, then we could possibly see more transactions between the two countries as time goes on. But I think, it covers a range of materials. And, for those companies that are looking at rare earths in particular, that probably will spill over to some degree in the lithium space. But in other metals that are important for these technologies, I think there's going to be broad support for that in Australia and likewise in some of the G7 countries too.
Yeah, so now it's the time from an investor point of view to go out and look for a very good and interesting critical mineral project within the western part of the world, right? Which means Australia, maybe Europe, Canada as well. And as I said in the beginning, you are CEO of a lithium and gold exploration company. And actually, Kali Metals was one of the most successful IPOs in the year of 2024 within the lithium space, meaning you could be one of of those exciting companies for the lithium industry. So maybe before we talk about your exciting gold assets and the potential there, can you give us a rundown on where is the lithium market as of right now? Because we know that lithium has been one of the most successful and one of the most hated commodities within the past few years, actually. And we're currently at a status where lithium is quite hated. And as the billion-dollar investor Rick Rule is always saying, buy what everybody is hating. So maybe you can give us an idea of the lithium industry and also your projects that you're running.
Yeah, I think, as all your listeners and viewers will probably be aware, the lithium market in the last 12 months has been a roller coaster. It's been very, very difficult. And yes, you're right, we had a tremendously successful IPO. And then 4 or 5 months later, the world changed. But having said that, we do have some very, very good ground. Just going back to the lithium market, though, I think, there was a period not so long ago where it looked like, in fact, the lithium market was picking up. And several of the larger lithium players, their share prices actually started to perform quite well. And in fact, some of the bigger companies, even though in the last little while the price began to fall again, some of those larger companies are actually still catching some investor interest. And their share prices are significantly higher than they were when they recorded their lows. So I think the market is looking at that contrarian opportunity. It is picking up some of these companies at what is likely to be pretty cheap prices. And if you look forward, let's say 18 months to 2 years' time, we should be in a better position with respect to lithium as the demand side of the equation starts to catch up, right? And just in the last month, the spodumene price delivered into China has been volatile. It is actually up $100 over the last 2 to 3 weeks. So I think that tells you in that sort of month time frame where it reached a low of about $840. It's now $944 today. So, that is a reasonable kick in the underlying price of spodumene concentrate. And, I think we're going to see a little bit of volatility around these levels until that demand side starts to kick in a little bit stronger. And of course, the US are doing deals with some of the lithium hopefuls in the US. There is some opportunity in the US, and we are seeing some news out of their domestic market to try and, increase their activity with respect to critical minerals within the US. And of course, that is flowing onto uranium and a number of other commodities, which I think you've been talking about recently.
Absolutely. And I think what many people have not really picked up is that even Volkswagen, right, our German car manufacturer, has been investing into a lithium mine. So really the industry is starting to be interested again. And all these great investors, even Warren Buffett is invested into a lithium project. So all these people wouldn't be into the lithium space if they wouldn't believe that lithium would stay that low for the entire period of the next couple of years. So I think when you're a contrarian investor, and you have to be a contrarian in this space particular, then now is a really great time to go out and look for interesting assets and companies. So let's talk about one of these. As I said, Kali Metals. Give us a rundown where you're at right now. We have had some interviews in the past. We talked about the exploration program that you wanted to run. Give us an idea, where are we at, and what is maybe the catalyst for 2026?
Yeah, sure. So, over the last 4 or 5 months, Jan, we've been quietly beavering away on our lithium project at Higginsville, which is just south of Kalgoorlie there. It's in the lithium corridor that Mineral Resources and other large companies tried to get a very large foothold here in Australia to try and, maximize the potential that they felt was in the lithium market sort of over the last 12 to 18 months. So we've got about 1,500 square kilometres of ground within that lithium corridor, very, very close to some of the existing lithium mines and deposits. So what we've been doing over the last 3 or 4 months is we're doing a lot of geochemistry, and so we've embarked on a soils program that was initially composed of 7,000 soil samples. We've identified further project areas that look prospective for lithium pegmatites, and we've expanded that program twice over the last few weeks, so that now we have a program of about 11,000 samples that we've taken. In fact, I think it finishes tomorrow. So we've had a number of teams out there in the field almost permanently for the last 3 months in taking those samples. So in terms of catalysts going forward, I think we'll start to see over the next few weeks, when the assay results start to come in from the laboratory, that we'll be able to put together that geochemistry together with the geophysics that we've already had analysed over the area, and we'll start to produce a list of targets that we would want to drill at an appropriate time, right? So I think what we will do is add value over the next 3 or 4 months with respect to targeting. And of course, the longer the list of targets that we have generated from that ground and from those samples, the soil sampling campaigns, the more valuable we believe that ground will become. And so that is what we've been doing. We have been busy, and we've now come to the end of that phase of geochemistry, and now we're waiting for the assay results to come in so we can put together the prospectivity maps that we need to do to look at drill targets, possibly for next year.
Yep. Okay, so you have a little bit of a different approach, right? You're not going out there and drill very aggressively and quite blind. You are very cash conservative, so you're spending your money on really to decide wisely where you want to spend your drill campaign, right? And then you're going out there. What is your cash position as of right now, approximately?
Yeah, that's approximately just over 5 million, Jan. So we produced our quarterly report a couple of weeks ago. So the cash position at that time was just over 5 million. So, we have been conservative. We are careful. We're not going out to spend a lot of money on drilling those prospective zones at this point, because, as you say, lithium is a little bit hated at the moment. It's important that we keep that work going, and we can do that relatively cheaply to cover large areas of ground, again, to sort of generate these projects. We're not rushing out to drill those projects at the moment. And, it's important that we keep that work going whilst we're also looking at our gold opportunities up in the Pilbara.
Yep. So you're really basically, to sum up the lithium side here, if the lithium cycle starts to get up back again, right? So you're in a great position and to be one of the first companies that can go out to do their drill work, and then you have probably very good drill results in a very good market. So this is approximately your goal there with the lithium. Let's have our switch to gold then, because in the meantime, you want to explore your gold projects as well. Give us an idea. What can investors expect? How far are you? Is it still early exploration? Are you close to existing mines? Give us an idea about the potential here.
Yeah. So, yes, we are early. Having said that, though, we were given this project at Marble Bar that we had in our portfolio as part of the lithium joint venture with SQM, the big Chilean lithium producer. We, as a result of a negotiation of terms within that joint venture, we were given the Marble Bar tenement back. in exchange for some additional tenements that we had that were put into the joint venture as well. So we kind of rejigged the terms a little bit. When we received the Marble Bar tenement back 100%, we started looking at other opportunities within that area. And to our surprise, and to cut a long story short, we've been able to discover and define gold on surface over a 3-kilometer strike length that has never been drilled before. And I think I may have mentioned last time we spoke that nobody had actually looked in this particular area for gold previously. So what we've been able to do in the last few months is to submit our what's called a POW, our program of work, into the mines department to get approval to drill. And as a result of that, we've had to do a number of environmental surveys to make sure that we're not affecting potential species there that are important. And I'm happy to say that over, the last few weeks, we've been able to complete some of those surveys, and we've got one to go. And at this point, that should be finished within a week or two. We're then going to be waiting for the report, and then subsequently, hopefully, we'll be drilling before the end of the year. So that's very exciting. We've been waiting to get on the ground here with a drill for a couple of months now, but we just need these environmental surveys to be completed to achieve our approvals process to get the drill on the ground. So it's high grade, it's relatively high grade. We're looking at 2.5 grams over the entire length of that 3-kilometer long outcrop. This is from about 120 of our rock chip samples that we've taken in that area. And it is only about 10 kilometers from an existing mine. And we believe, therefore, that there is an opportunity, should we discover something of economic value, that we might be able to monetize that relatively quickly. Okay. Right. And it doesn't need to be a huge deposit that would, mean that we would have to build our own plant and all the capital that's actually needed to actually do that. We think that we've got an opportunity to monetize that asset should we have exploration success much, much sooner than we would ordinarily if we weren't close to an existing operation.
Absolutely. And I think this is very important, right? Mining, a mine is a depleting asset. So one day there is no more ore to mine, but you still have your mill and everything ready, your plant, which has cost a lot of money. So there's always good for a larger mining company to buy an asset out of a smaller company to get the mill up and running. I think that's the most important thing. So therefore, it sounds like a very good location. So Paul, all of this sounds very good. My last question would be, do you have enough cash for that? You told me earlier that you have approximately 5 million Aussie dollar. Do you think you have enough cash for all your plans that you just laid on the table?
We did a small capital raise in August, September this year. Jan, we raised about $1.2 million. It was very small. We didn't go out for a lot of money. It was a bit of a top up. And that really was to make sure that we had enough money to cover the drill program at Marble Bar. So yes, in answer to your question, we have enough money to fulfill our gold exploration strategy through to next year. Now, I think we're always optimistic here in the minerals industry, and I would very much hope that we have some success at Marble Bar. And if that is the case, and it looks like we might have an opportunity for a larger resource, well, then, yes, we would be looking for additional funds from the market in order to make the best opportunity of that discovery. So, we are an exploration company. Of course, we need funds from the market at various times. But with the amount of money that we currently have in Treasury, we are fully covered for that drilling program at Marble Bar.
Very good. Paul, thank you very much. We covered a lot of things today, your gold project, lithium project, the general market, and also the macroeconomic situation for the mining and metal industry. It was a very good interview. It was a pleasure talking to you, and I'm really looking forward to see your results from the upcoming drilling campaign, and we talk again soon. Thank you very much.
Great, Jan. It's always great to talk to you guys.